Nvidia shares once again powering higher in the wake of that Blockbuster earnings report last week. The stock up more than 100% year to date, and sales skyrocketing 262% for a record $26 billion.
Astounding. The company forecasting the growth will continue, anticipating record sales of $28 billion in the current quarter. Here to break down more about what's going on with the company is Andrew Chang, Technology Director at S&P Global Ratings. Good to see you, sir. We haven't spoken to you since that monster number. So your reaction at this point?
Yeah, thank you for having me. I would say the air pocket that investors were concerned about is unlikely to materialize given their comments in the earnings call. The H100 demand is still very strong. Certainly sustainable through the H200 shipping now, and we think a very good chance that it continues into Blackwell, which will ship at the end of this year. And it confirms the comments made by their customers, primarily the hyperscalers like Amazon and Microsoft, like large internet companies like Meta, that they're upping their AI capex to meet demand. Well, important to point out that it is expected demand, but nevertheless, this confirms the view from the customers. And we also like the additional color on the enterprise, Tesla, for example, and on the sovereign. I think they mentioned Japan, Italy, Singapore. So these were all great data points that there is likely to be a sustainable demand, not just over the next year, but probably for the next 2 years.
Interesting, Andrew. And we had seen the stock pull back a little bit at the start of the session, but now fractionally on the day. Another record high for Nvidia. We'll see whether or not that can ultimately turn the NASDAQ positive. Here is an intraday chart. Shares up 0.4%. I saw that your firm recently raised its credit rating to a AA- on Nvidia. What was behind that decision?
Sure, yeah, and this was done at the end of April, so about a month ago, prior to the earnings release. Ultimately, we appreciate the significant technology lead that the company has built over the past decade, alongside this great product execution from Hopper to likely Blackwell. And we view Nvidia as a platform company, not a chip company, not just a GPU maker, but they also make hardware, networking included. They have a full rack scale solution, and most importantly, software, which they've developed over the past decade. And that makes their competitive mode very wide, and it becomes difficult for competition to catch up. We at S&P also view that AI is a significant market opportunity. We forecast that AI spending will go from less than $200 billion in 2023 to about $650 billion by 2028, so about a 30% CAGR over a 5-year horizon. And clearly, Nvidia will outgrow that by a country mile. So we upped our revenue forecast, cash flow forecast, and frankly, that number is already stale, given the really strong earnings release.
Sounds like you just answered this in a sense, but to those who say it's time to take some profits, what would you say?
Well, I can only speak from a credit perspective, but from a credit side, the rating upgrade reflects that we view this as a long-term growth opportunity. Now, the growth will not be up and to the right every quarter, every year. There could be a pause, there could be digestion by customers, but all in all, we see a very strong growth prospect for the next 4 or 5 years. And Nvidia is clearly the biggest market beneficiary here.
Andrew, you mentioned other plays in the AI space that could benefit from this as well. What are those companies?
Sure. Some of the names that come to mind is Broadcom, for example, which from a revenue perspective will be the second largest beneficiary from the semiconductor side. Another company like Micron, a big memory maker, which will benefit from selling into selling into Nvidia through their HBM or high bandwidth memory. So there are multiple companies in the semi side, Marvell as well, AMD, Intel to a lesser extent, but there are many companies in the semi side who will all benefit. This is a rising tide that's going to lift many boats in our view.
Indeed, and when you look at the AI game, I don't know if you're a baseball or a football guy or neither, but what inning are we in? What quarter are we in overall?
Great question. Given our 5-year forecast, I would say we're in inning 2, probably not even a beginning of inning 3. So we have long ways to go before we see the market maturing and slowing down meaningfully. Again, that said, I want to point out from a credit perspective that this is not going to be a smooth up and to the right type of an event. There will be cycles. Nvidia has had cycles. Semiconductor industry at large goes through a cycle. So you'll see some bumps here and there, but along the way, there should be, over the longer term, very strong growth.
Very strong growth. Obviously, Andrew, you and your firm are very bullish, but I'm sure there are risks. What are some of those risks?
Sure. The obvious one being the potential short-term swings in demand. It could be a Microsoft or it could be Meta saying, hey, we bought too much, or the demand is not as robust as we expected, so we're going to pause. And we call that digestion. That could last 2-3 quarters. Another is, again, competition among AMD, Intel type of companies, and competition from customers. Amazons and Microsofts of the world are developing their own chips. They frankly can't be too excited about Nvidia posting these type of numbers. That's all their cash going to Nvidia. So they're going to make sure they get a piece of that pie and diversify their supplier base. There's also the supplier concentration issue, which is frankly a tail risk, a remote risk, but something that bears monitoring, in that TSMC in Taiwan is their primary foundry provider. And they have 90%, TSMC has 90% of their leading fabs, advanced fabs in Taiwan. That's a risk. There's a geopolitical risk, water risk, energy risk. So there's a laundry of a list of risk that we are monitoring, but certainly Nvidia is navigating well through these potential risks. On
the geopolitical front, Andrew, how could the recent tariffs announced by the Biden administration benefit a company like Nvidia?
Nvidia is unlikely to benefit from the tariff at this point. The exports to China have already shrunk to a pretty small portion of their overall revenue base. And whenever there's a tariff, I think it's bad for the entire semi and tech ecosystem.
So if we see a trade war ramp up, you do not think that would benefit Nvidia? Is that the case?
Yes. I mean, as of today, they're growing despite the lack of exports to China because the supply is not sufficient to meet demand. Should there be any tariff or trade war escalating over time, it remains to be seen if a valued in short supply commodity like GPU will be hit.
Jensen Huang, the man behind the curtain, what makes him so unique in the space?
Well, I would say that he had the vision. It's easy to say today, but in hindsight, that he had the vision to go after an opportunity that didn't exist. He created a new market, a GPU market, again, that didn't exist, and went through a period from a credit perspective where the company wasn't generating cash, the company wasn't doing well, but he still held on to this idea of a broad platform company combining GPU, hardware, software, which again, had not been done until Nvidia came along. So, he's a visionary, and again, there were some painful periods during that time, but looking at it today, it was a great call.
Andrew, we appreciate your time. Thank you for joining. That's Andrew Chang, Technology Director at S&P Global Ratings.